In today's video, traders, we're going to be talking about the engulfing candlestick pattern and some really effective ways to trade it. So stay tuned. We're getting into it right now. We are going to be taking a look at the bullish and bearish engulfing candlestick pattern today in this video. By the way, if you're new to the channel and you're looking to improve as a trader, start right now by subscribing to the channel down below. I've got tons of content here for traders looking to learn. So let's go ahead and jump into it today. Again, we're talking about the bullish and bearish engulfing candlestick pattern and some effective actual trading strategies that you can use when talking about these candlestick patterns. Now, one thing I want to mention before I go any further with candlestick patterns is that one of the best ways to actually use them is with confluence of other factors or other combinations or concepts in the market. My personal opinion is that you can find a lot better of a trading edge when you combine multiple things like, the trend, you have candlestick patterns, you have support and resistance, you have Fibonacci. There's other things that you can use in combination. But today we're going to specifically talk about a trading strategy that revolves primarily around bullish and bearish engulfing candlestick patterns. Let's start out by identifying what a bullish or bearish engulfing candlestick pattern actually looks like and kind of some of the logic behind it. Now, what you're typically going to see when it comes to engulfing candlestick patterns is you're going to see a market that's moving one way. This is a reversal based concept. So what we're looking for is a potential opportunity to reverse with the market, but we're waiting for some sort of confirmation first. So let me go ahead and explain what I'm talking about. Let's say that we have price moving up, right? We see price is moving to the upside. Let's say you have this green candlestick right here. Right, so you have a green candlestick pattern. Price has been moving up. You can see we have a series of nice green bars, right? Price is on its way up. Well, suddenly we get something coming along here. It's going to be a big red one. Now, what I want to point out about this theoretical red candlestick that we are currently creating, just imagine this is filled in, forgive my artistic skills here, but what you can see is that we had a huge sell-off here in this market, right? So we had a price movement to the upside. You can see price was again rallying to the upside when suddenly that bullish momentum or that push to the upside was actually rejected when we printed this candlestick pattern here, right? This is our bearish engulfing candlestick pattern example. So we had a price that was making a move to the upside. Suddenly, bears stepped into this market and said, enough is enough. We're going to sell this market off. And you can see that again, there was rejection and price rolled over in favor of the bears. You can see that this is specifically engulfing the previous candle body. So you can see here is our, here's our open right here. And this is our close right here of the previous bar. And then what you can see is that price opened up here and closed significantly beneath that level there, right? So there is some really kind of a fully engulfed candle here where this price was engulfed by this bar here. Hopefully that makes sense. Let's go ahead and look at some examples here. Of an actual, on the chart here, you can see I've got an example here pulled up. You can see we are in the context of a downtrend. That's going to be important, so stay tuned. We're going to come back to that concept in a second. But what you can see here is we can see an actual candlestick pattern example of what we were just talking about. You can see that prices, we saw a big movement to the downside, and suddenly we see this counter trend, right? This reversal or price movement to the upside. So we see prices floating to the upside, prices making a movement here upwards, but suddenly let's take a look and see if we can spot it. Right here, we had a big bearish reversal pattern come into play in this market. Now, what does this mean? Well, this means that we had a push. Remember, we talked about it just a second ago. We had that push to the upside when suddenly we had a big bearish bar come in and kind of print here and show kind of a line in the sand where sellers were strong. And what you can see is that price actually fell over from there. So we saw that bearish engulfing candlestick pattern print, and suddenly markets turned around and they started to head lower, right? So that was kind of a notable moment when we saw this scenario play out. So this kind of just says, hey, sellers are going to be back in control here. Now, it doesn't work out every single time. There's no perfect system or strategy or, even entry technique that's going to get you into the market every single time perfectly. But what you'll see is that this happens very often in the market. You see a lot of times where a bearish engulfing candlestick pattern combined with some other factors can be a really solid entry point if you know how to play them correctly. So let's go ahead and talk next steps. What can we do if we see a bullish or bearish engulfing candlestick? Well, just before I go any further, in case you don't know, let's just identify what a bullish candlestick or a bullish engulfing is going to look like. So same structure, just want to be clear here. Let's say we have a downward market. Well, a bullish engulfing is going to see something like this. right? Just an inverted version. So we had a market that's headed downwards, and suddenly we see a big, strong bullish bar come in and potentially push price higher. That's what we're talking about here. Just wanted to clarify that before I went any further. So we are talking about this technique right here. We see price showed a nice bearish engulfing, and we saw a nice rollover from there and continuation of the overall trend. Now, how could we actually trade this? What can we do with this once we start identifying these bullish and bearish engulfing candlestick bars? Well, there's some great ways that you can actually use this in your trading. So for example, I'm going to give you guys a simple entry and exit style that you could use with your trading when looking for engulfing candlesticks. So again, we identified that sellers stepped into this market. We could potentially enter on the very next bar. That's a very popular way to trade it, right? So one way to trade it is we would go short right around here. Let's say this is a short potential entry here, and where would we put a stop loss? That's the next logical question. What you can do is you have a couple options. You can put it over the high of this bar here, right? The actual engulfing bar, that's an option. Or you can put the stop above the high of the bearish engulfing candlestick pattern, right? So we have that whole pattern. You could put it over the high there. You want to put it just above the highs, you know, at least above the highs by a little bit, because sometimes price will react, right? It'll come back to that level to retest. We see that happen in markets quite often, so that's not out of the question. So you could put somewhere up there some kind of stop loss there. Now, what you want to typically do, a lot of traders who are looking for kind of a positive risk to reward, they're going to look to see that they can get 2 times their risk out of this trade, sometimes even 3, and sometimes even 4 times the risk, you know, for a potential reward. So for example, we identified that our risk is going to be this range. Let's just say, you know, I'm going to eyeball this. It's not going to be perfect. That's potentially our risk area. So let's say 2 times that would be down, let's say down right around here. So you can see that if I just identify this is going to be our take profit, right? And I'll go ahead and draw in that this is going to be a stop loss potential area. So one of these two are just an example. Now, what other times people will do, one other way to trade this is to put 2 take profits, right? A take profit 1 and a take profit 2. That's another potential idea that you could do, right? So you could take some profits off at a 1-to-1, and then you could take a second one off at 2-to-1. So for example, let me just highlight that. 1-to-1 is here. And remember guys, I'm just highlighting, or I'm just eyeballing this, so it's not gonna be perfect. But you can see a 1-to-1 there and a 2-to-1 there. That's just a theoretical idea of how you could trade this. Now, actually, we have another bearish engulfing candlestick pattern that happens shortly after. Now, I do want to say I am picking out some pretty good examples here just to kind of show how these things work. Just note that not every single bullish or bearish engulfing candlestick pattern is going to give you a perfect entry, and you're not going to just suddenly be printing money out of the markets. You still have to use other things, which we're going to get to pretty soon. Make sure you stay tuned, because there are some other tricks that you can do to even further increase your potential opportunity with this candlestick pattern. So here's another example. You may have already spotted it just because, you know, once you start to see these candlestick patterns, you can spot them relatively quickly, and you'll see again and again in the markets, there are some really good opportunities that come up with this. So we had a bearish move, right? We saw that our candlestick pattern here was nice. Now we see another example. We see price retracing. We see markets moving to the upside, and suddenly we get that same scenario play out again. You can see there's where we have a bearish engulfing print, and you can see that price totally was engulfed by the previous bar. That's typically what you're going to see when it comes to a bullish or bearish engulfing. So what you can see is next we did have a nice little slide to the downside again. So just setting up our theoretical idea, you can say if we set our stop just over the highs, then we could have set our stop loss right around here. And you can say that, well, if we would have taken a profit here, we would have set it, let's say, roughly there. And you can see, again, this would have worked out really nice. Take profit there. Again, our stop loss up here, and this would be our entry on the short side right here, right? So we're looking to join in on a strong, you know, kind of overtaking of the bears in this situation. So bears have shown us that they are in control of this market most likely, and that we could see further downside. All right, so let's go ahead and take a look at a bullish engulfing example just so we have some context of what things might look like on the long side. Now, what you're going to see here is the exact same concept, except it's going to be in reverse, right? So when we're looking at a bullish engulfing, we're looking to see that the market is in a bearish state, but suddenly bulls step in and say enough is enough. We're going to step in and start buying this market up and see that prices continue higher, right? So that's what we're looking for with a bullish engulfing. And what you can see here is that we have a nice little example right here on this chart. You can see we're above that moving average, signaling that we are consistently, you know, making higher highs. We're pushing price higher. This is an example of just, you know, we're breaking through that downtrend that we saw and seeing upward motion in this market. So now we're seeing a pullback, and look what we have right around this area. you can see as price pulls back, we form a nice bullish engulfing. So sellers were pushing this market down. You can see we had a minor retracement pushing lower and lower when suddenly a big change happened right here. You can see sellers tried to push this market down, but suddenly buyers pushed price really, really hard to the upside, showing that there was a lot of strength in this area. You can see, in fact, we also kind of formed a nice little double bottom there. You can see price came down to this level, found some support, retested that area, and found major support before rallying higher and really getting a nice little trade playing out here on Aussie New Zealand. This is a 1 hour time frame. And what you're going to see is that these happen on all sorts of different time frames and can be used as signals on different time frames. Just a side note, a lot of times on the higher time frames, however, you're going to get a little bit more clean of a signal just because there's less noise in the market. Okay, so let's go back to our concept here. Again, we saw a nice bullish engulfing start to happen here. Let's talk about how we would have handled this trade. You can see that here we would have put our, that's where we put our stop loss, right? So we'd put our entry right after that kind of pop in the market. Now we would put a stop loss underneath the recent low of either the bullish engulfing bar itself, or you can put it underneath the lows. I've seen people do both. So that's where we'd put a potential stop loss, right? So our entry is right around this area. Shortly after, we would just look to get in on the next bar, right? So this is our entry. We would buy right on this market, looking to see that price continues higher. Now, what you'll see next is we want to set our target, usually a 2-to-1 or even 3-to-1 risk to reward. So in this case, let's say that we did a 2-to-1. You can see a 1-to-1 would be right around this area. So in terms of a 2-to-1, we might go for something like this. You can see all the way up here, which we did ultimately get hit before market actually continued higher. Even after this, you can just not see it on the chart. So with that said, this would be a potential take profit, right? You could put 1, you could put 2. Again, I've seen people do both. There's a take profit 1 and 2, just some options there with how you can trade these bullish engulfing candlesticks. One more thing though, so there's our trade, but one more thing, you also want to look for other factors. You can see in this case, if we draw from our low to the high with a Fibonacci, we had a nice pullback to that 50% retracement level, which is a solid level when it comes to pullbacks in the market. You can see we had a nice impulsive move. We had a pullback. We formed that bullish engulfing, and we saw prices rally from there. Just another example there on the long side, guys, so that you get context for the long side as well as the short side. So with that said, guys, now that we understand kind of the bullish and bearish engulfing candlestick patterns, what can we do with them how can we improve our odds of success with them? Well, this is where other things come into play. Now I have a whole, kind of entire playlist of videos on my channel. You can go find it on my channel, full of Forex education, kind of strategies, kind of techniques that you can use to look for in technical analysis. But I'm going to give you guys just a few quick ones. If we get a Fibonacci retracement here, here's an example. This is just an example of one that we could have used, right? You can see that this was a level of Fibonacci retracement. You see right around that 50% level, price retraced there and continued lower. In case you don't know about Fibonacci retracements, I've got a video here that you can click on, go learn more about Fibonacci retracements. That's just an example. Another scenario though, but check this one out. Support and resistance, right? So you can use support and resistance here, for example. This would have been a really nice added level of confirmation to your trading setup, right? So on this particular entry that we talked about, you could have combined it with this concept of a significant level of resistance in this market. So for example, let me just quickly pull up my sketchpad again. You can see that this level here previously acted as a major level of support, right? So price did bounce off of these lows. You can see we did get nice bounces, but then price broke through. We can see price broke lower, came back to that level and retested it, now acting as a level of resistance. So when price came up into that area again, forming another bearish engulfing, you can see price reacted heavily to that level of resistance in this market. Now, one more thing, guys, that's super, super key here that you could use in combination with a bullish or bearish engulfing candlestick pattern is the concept of a trend, right? So a lot of times when you're talking about candlestick patterns, a great way to increase your chances of success are to stick within the trend. You can see I've got a 100 period moving average here on the chart that's showing that the overall trend here is down, right? Because price is currently traveling down away from that moving average, kind of pushing lower and lower. Sellers are in control of this market. So we could filter out only trading on the short side when it comes to trading for bearish engulfing candlestick patterns, right? So using those things together can create higher probability trading, setups for you in your own trading strategy. You want to kind of highlight all of those things in your own trading strategy as you go along. How are you going to trade? Are you going to look for significant level of support and resistance? Are you going to look for Fibonacci trend in combination with that bullish or bearish engulfing candlestick pattern? Guys, I have a tool that I want to tell you guys about. I've got a video on it right here. It's a software tool that I built to help you scout for the very best bullish and bearish engulfing setups. It will automatically show you on the charts where they are occurring and help you find them. I want you to go check that video out. It's got some really cool tips and stuff you can use. It is a MetaTrader 4 platform software. You can go check out right here on the video. I definitely recommend you check that out. We'll see you on the next video.